The most recent results we've seen out from Zenith Bank, gross earnings up over 30% there to 183 billion naira. Profit before tax up 28% to around 50 billion naira. But quarter on quarter results were slightly softer. Just take us through your reaction to the numbers.
Morning, Samantha. Like you said, Zenith Bank's 9-month results came out yesterday. Essentially, profitability was down on a quarterly basis by about 20%. However, if you check the trends year on year, fantastic growth in there. But the more important thing I think people should focus on is looking at the balance sheet trends. Okay, we saw a bank, the second biggest bank in the country, delivering loan growth at 18% year to date. This exceeds management target of 16% for this year, after just 9 months. I think that's one key positive trend that should be taken away from this set of results. The downturn, or should I say the quarter-on-quarter weakness in earnings, that's largely due to something we've seen as all the other banks have released. PAT has been down on a quarterly basis, and that's largely due to net interest margin pressures, and that's from the asset margin side, because money market yields were lower in the third quarter of the year. So that's weighed on net interest margins for this set of results.
Going forward, is that likely to be the case? Are we likely to see quarter four even softer with the MPR having been increased?
Like I said, the key drag was on the asset margin side, and the money market yields were weaker. Given the recent MPC decisions, that bodes well for money market yields. And like we know, clearly interbank, treasury bills, bond yields, they're all higher today than they were during the third quarter of the year. So from an asset margin side perspective, that bodes well for net interest margins in Q4. However, I think the focus now moves over to 2012 as the lagged impact of increased MPR starts to feed through on cost of funds. I think that would be where analysts and investors will be questioning management at their conference calls for this set of results.
Let's just take a look back at Zenith. When we're looking at the stock price there, 12 naira and 20, it closed out yesterday at 21% in the red for 2011, pretty much trading on par with its book value. But comparing it to other banks in Nigeria, they're all trading generally at a discount to book value. How would you rate the stock at 12 naira and 20 kobo?
Okay, currently we believe, we look at Nigerian banks in a basket. So we pitch them against other sub-Saharan African banks. And essentially, Nigerian banks are trading at a discount to, for example, their Kenyan peers. However, the Kenyans have a much faster loan growth, but macro headwinds over there, causing some concern. So moving over to Nigeria, the valuations are cheap across the space. And clearly, like you said, Zenith Bank is one of the outstanding banks when it comes to financial performance. So essentially, you have a bank, like I said, the fundamentals continue to justify a rating of the stock. However, the market is just not reacting. So whether this result is going to be what is going to cause a turnaround, we are exactly not sure. So I think if anyone is really looking for fundamental plays, I think Zenith Bank just offers you that. You just focus on the fundamental trends we are seeing.
A smaller bank that came out with results yesterday was Ecobank Nigeria. Of course, the holding company Ecobank Transnational Incorporated reporting that pre-tax profits up 51% over the entire group. Ecobank is buying Oceanic Bank. Anything to point out from the numbers that we saw from that end?
Nothing in particular, as it's not one of the banks under our coverage. However, they have a conference call next week. I think that'll be where analysts and investors will be looking to get more clarity on, on the trends in the 9 months of the year.
Moving on to Skye Bank, quarter 3 results out there. Some pressure from the bank in terms of margins going forward, higher provisions. What is your outlook for Skye Bank, of course, sitting below the First Bank and Zenith Bank portfolios?
Okay, like I said, there are some key trends we've seen in this set of results. The first one is NIM squeeze. Net interest margins have been lower in Q3 relative to Q2 and Q1. The other thing we've seen is loan growth has come in quite fast in Q3. Skye Bank, for example, as at half year, they were down by 2% year to date. But in Q3 alone, they grew their loan book by 12%. I think that's fantastic. And something we've been looking for at Nigerian banks this year has been that loan book pickup. And we've seen that come up pretty well in the third quarter of the year. However, the final thing is the weaker profitability on a quarterly basis. That's also featured for Skye Bank. And for them, it was NIM squeeze, and in addition to that, also higher impairment charges, which we think is likely to be general provisions related.
So that is, of course, a trend that we're seeing across the banks. But from the Q3 results we're likely to see out, are there any banks that you would red flag as perhaps underperformers for the quarter?
If there's going to be any potential, or should I say potential flat underperformance, one thing would be haircuts on the Xenon-related sale to AMCON. So you look at all the banks involved in that process, and a few which may not have taken provisions on, or should I say adequate provisions on that sale. I think those would be potential areas for red flag. And the other one would be, clearly we all know Diamond Bank is doing a cleanup this year, so that's also a bank to watch.